We're going to talk about fraud and its impact on companies. Fraud is defined as the intentional misrepresentation of facts which causes injury or damage to another party, and it's a large problem that increases each year. There are two types of fraud that we're going to talk about. The first one is called misappropriation of assets, and the second one is fraudulent financial reporting. If you've encountered fraud in your workplace, it's probably with misappropriation of assets. Misappropriation of assets means where employees steal assets from the company, typically cash, but sometimes it could be inventory or supplies. Sometimes people steal cash by falsifying expense reports. Either way, misappropriation of assets relates to an employee taking an asset from the company. The second type of fraud is fraudulent financial reporting. This is where managers make false entries in their accounting books so the company appears more profitable. We all know that we present financial statements to external parties, and if managers make fraudulent entries, then your income statement and your balance sheet and all the other financial statements are inaccurate. The intent of this is to deceive your investors and creditors. Both types are fraud. The first type is more frequent, so you will hear and see a lot more of misappropriation of assets. However, the second type, the fraudulent financial reporting, that is more expensive. Fraudulent financial reporting deceives investors and creditors, and therefore it causes a larger amount of damage than misappropriation of assets. If you remember a company called Enron, somewhere around 2001, they went bankrupt, and it was because of fraud. The way they committed the fraud was through fraudulent financial reporting. This is called the fraud triangle. These three elements are necessary for an employee to commit fraud. The three components are motive, rationalization, and opportunity. Motive is the reason why a person commits fraud. Typically, it falls into one of two categories, either need or greed. The person who commits fraud may legitimately need that money. It might be they're going through some financial difficulty, maybe medical bills, maybe a loved one is not feeling well and is in hospital, and they need that money. The other reason is greed. Greed is they just feel that they don't have enough, so they will steal in order to get it. The second element of the fraud triangle is opportunity. Opportunity arises through weak internal controls. If cash is not locked up safely, employees can steal it. So, what would be the solution? To lock up that cash. That would be called a control. There are several controls within a company, and if your controls are weak, that creates opportunity for somebody to commit fraud. The third element of your fraud triangle is rationalization. Rationalization is where the person who commits fraud thinks that it's okay to do it. They convince themselves that it's okay to commit fraud. And the reasoning is things like, I deserve this. Nobody treats me fairly, so I'm going to make sure that I'm treated correct. Or they'll think to themselves, no one will ever know. Another typical reason, just this once, I won't let it happen again. Or, everyone else is doing it, why shouldn't I? Those are all examples of rationalization. So again, the fraud triangle is motive, opportunity, and rationalization. Companies have no control over motive or rationalization. However, companies can control opportunity. What companies do is they come up with strong internal controls to prevent fraud and to detect employees that commit fraud.